Hello guys, thanks for coming back to the channel, and this is a special video. We are going to be analyzing the different pairs of the market. This video is specifically about diversification in forex trading. So without wasting any time, let's jump right into it, guys. So there is always a saying in trading, because you can't put all your is in trading, you can't put all your eggs in one basket. Otherwise, as soon as the basket falls, you are going to lose out on everything you have. So what do we do in this case? In our trading, you have to diversify your trading portfolio so that you don't lose out on one trade with everything. So what do I mean by this? There is a lot of currencies in the market, and you can't just say you're going to trade one pair for the rest of your life, because every time that single pair is strictly has no volume, that will be an off day for you. So it's always good to learn how to trade different currencies, so that you are not stuck with only one. So how do you do this? First thing, you can go into the market and try to find currencies that have correlations. For example, I have written down here 4 currencies that are traded with this almost in the same analysis. So here is AUD USD, AUD JPY, Euro AUD, and GBP AUD. So these four currencies right here, they have a common denominator, which is AUD, which is Australian dollars. So these 4 currencies, as you can see, one currency will impact all the other 3. For example, in fundamental analysis, there is no news that will come out on this pair, Euro AUD, and there is no news that is going to come out on this pair. But news will come out always on Australian dollar, and this will impact any pair that is trading with Australian dollar. So this JPY is trading against AUD, Euro against AUD, GBP against AUD. So these pairs will always be impacted by any fundamental news that comes out, any economic news release that comes out on the Australian dollar. So it's better every time you're trading to always put these 4 in one basket and try to do the analysis of all of them, because anything that changes here on AUD USD will impact all these 3 pairs. So let's try to look into the next pair, which will be the JPY pairs. So Euro JPY, AUD JPY, and GBP JPY. There is a twist in these two, because GBP and Euro JPY, mostly these are in the this is in Europe, which is this is in the Eurozone. So these two will always have some sort of a similarity in the market structure. So when you're analyzing, these two can be easily analyzed together. It doesn't mean that a confirmation on this means a confirmation on this one, but always a confirmation on the Eurozone will always come a little bit similar. So it means if you go into the 1-day chart, for example, let's go into the 1-day chart and try and look at 4-hour chart is okay. Let's look into the 4-hour chart. Try and look at Euro JPY. You'll see that Euro JPY is breaking to the upside. And if you go on GBP JPY and you also look into the 4-hour chart, you will see that GBP JPY is also breaking to the upside. So these two can always easily be analyzed together. So AUD JPY can be analyzed with let's remove this. AUD JPY can always be analyzed together with the AUD pairs, and Euro and GBP can be analyzed together. So this is our second pair. Now the third pair will be Euro USD and GBP USD. These two pairs can always be analyze almost in the same scenarios. So what do I mean by this? You can see that in the previous week, in the weeks before, you have seen that trend to that downward trend on GBP USD. Okay, that was a downward trend on GBP USD in the previous almost we can mention that it has been there on the previous entire month. We had a downward trend on GBP USD, and if you look at Euro USD, it's the same thing. We had a downward trend on Euro USD for the entire month before. Now it means GBP USD and Euro USD, they always have a similar market structure. On the intraday time frame, you can have different entries on these two pairs, but in the general market structure, they are always moving in the same trend. As you can see, we had a big impulse move on our GBP USD in July, which was the first 2 weeks of July till 14th of July. And you go into Euro USD, you can see the beginning of July, it started a little bit late, but in the general trend, you saw that big impulse move till 14th of July. Though GBP started a little bit early in that move, actually it started around the same time, because this started around 5th and 6th, 5th of July till 14th, and Euro also started around 6th till 14th. So this 1 week was a big impulse move to the upside on Euro, and it happened also again on GBP USD, as you can see right there. This big impulse move was on both pairs from 6th to 14th, and if you go on Euro USD, same thing on 6th to 14th. Now, what I mean by this, always when you're trading, try to diversify your portfolio. Don't stick to only one pair, because Euro USD and GBP USD, they always present a similar market structure in the general format. In the general outlook, you always have a similar market structure on Euro and GBP USD, similar market structure on Euro JPY and GBP JPY, and similar market structure on AUD USD, AUD JPY, Euro AUD, and GBP AUD. But for these two, GBP and Euro AUD, they have a negative correlation with AUD USD, which means every time AUD USD is in a bearish trend, they will go for a bullish trend. So this has a twist on them. So this is simply how you can diversify your trading portfolio in forex trading. Don't stick to one currency, Euro USD, and that's it. Because if you're analyzing Euro USD, you can factor in the GBP USD, that they have the same always outlook in the general trend. Now this will help you trade different pairs, and it is possible to analyze different pairs at the same time. So concurrently you analyze these two, and concurrently you analyze these two also. This will give you an edge of the market, where you'll have to trade multiple currency with a similar analysis, similar fundamentals, and that will help you boost your trading profits. Always don't forget, you have to manage your risks. Start with small lots. As you increase in more orders, the trend will always be your friend, and that's the only way we can make money in the markets. Follow that trend. If you try to get this one-off orders, you will always lose out on the market. You cannot beat the market, but you just have to follow the trend and accumulate those profits slowly by slowly. This is not a get rich quick scheme. This is a purely incremental process. Place in your order 0.05, 0.1, whatever is possible depending on your account. We are going to do a separate video where we'll try to explain how many positions you can open on a different account frames, account sizes, or how much you can risk on your account to stay longer in the market so you can catch the big move when it comes and you try to catch up with the market. So this was our video about diversifying your trading portfolio in forex trading. So thanks for watching, guys. If you haven't subscribed to the video, please subscribe and hit that notification bell so you always see new videos when we post. And every day we have a YouTube live where we will always be posting confirmed entries we find in the market on a daily basis. We have a YouTube live where we post the entries we find. So tell all your trader friends to follow the channel. Always watch the YouTube live. We post those entries. Thanks for watching, guys, and keep it up.